Hi, welcome back to Joe Blogs. In today's episode, I want to provide you with an update as to what's happening in Venezuela. The latest economic data shows that inflation is now running at 429%, which makes Venezuela the country with the highest inflation in the whole of the world. And unfortunately for Venezuela, this isn't a one-off event. The economy is currently in its 9th year of recession, which makes it the longest recession in history and more serious than the Great Depression of the 1920s. Now, if you follow the channel, you'll know that we've discussed economic crises in a number of countries all around the world. And the common denominator for a lot of these countries is that they are net importers. They lack resources to generate income to be able to buy in all of the things that they need. However, the situation in Venezuela is very different because Venezuela is the country with the largest oil reserves in the world. And as oil is such a valuable commodity constantly in demand, you would have expected Venezuela to be one of the richest nations in the world. So what is going on in Venezuela? How has the country got itself into this dire situation? Well, today's video will provide you with an answer to that question. We'll start off by looking at inflation and what's been happening over the last 5 years or so. We'll have a look at what's been happening to the Venezuelan currency, because as you might expect with high levels of inflation, the currency has devalued significantly. And over the past 15 years, Venezuela has actually devalued its own currency, taking off 14 zeros over that period. We'll have a look at the history of oil in Venezuela, how the country became one of the largest producers and exporters of oil, and how the leaders of Venezuela mismanaged that situation and caused the downfall of their own economy. We'll then go on to talk about the sanctions that have been applied against Venezuela. We'll then talk about legal action that the USA is taking against Venezuela, whereby creditors are looking to seize oil that's being exported to China for repayment of outstanding debts. And then finally today I'll wrap up with my summary as to what I think is likely to happen for the country over the course of the next 3 to 6 months. Venezuela is located at the northern end of South America, occupies a roughly triangular area that is larger than the combined areas of France and Germany, and has a current population of around 28 million people. The country is bounded by both the Caribbean Sea and the Atlantic Ocean to the north, Guyana to the east, Brazil to the south, and Colombia to the southwest and west. The capital of Venezuela is Caracas, which is the primary centre of industry, commerce, education and tourism. As mentioned at the start of the video, Venezuela is blessed with natural resources and has the largest oil supplies of any country in the world, and alongside its oil reserves it also has significant amounts of natural gas and coal. Prior to the development of the oil industry, agriculture, fishing and forestry were central to the Venezuelan economy and produced more than half of its GDP. Venezuela's main cash crop is coffee, and its staple food crops are corn or maize and rice. It's reported that Christopher Columbus first arrived in Venezuela in 1498, and European explorers named the region Venezuela, which means Little Venice, after observing local houses on stilts above water. The Spanish established their first permanent settlement in Venezuela in 1523. And the country was under Spanish control for almost 300 years until it obtained its independence in the early 19th century after fierce fighting led by revolutionaries Simón Bolívar and Francisco de Miranda. This chart shows the movement in inflation in Venezuela over the course of the last 12 months. And as you can see, the current rate of inflation is 429%, which means that over the course of the last 12 months, prices have risen by more than 4 times. And as you can see, Venezuela has been experiencing inflation of over 400% for the last 4 months. And to put Venezuela's inflation into perspective, this chart shows the countries with the highest rates of inflation in the world. So as you can see, Venezuela's 429% is significantly higher than Lebanon's 260%, Zimbabwe's 176%, Syria's 139%, and Argentina's 114%. However, all of those countries are also experiencing major economic crises right now. Once inflation rises above 100%, you have got serious problems in your economy. Now, if you quickly cast your eye down the remainder of this list, you can see that all of these countries are experiencing economic crises at the moment. Over the course of the last 12 months, I've posted numerous videos on the problems that are being experienced in Cuba, Turkey, Pakistan, Sri Lanka and Egypt. But when you compare the rates of inflation in those countries with what's happening in Venezuela, it really gives you an indication as to how extreme the problems are. And if we jump back to the chart for the last 12 months, you can see that this time last year, inflation was running at 157% in Venezuela. So the problems that are being experienced in the country have been going on for a long time and are now ingrained into the economy. So it's clear that the problems that are going on in Venezuela have been around for some time. And if you look at the profile of this chart, you can see that over the last few months, inflation has really started to ramp up. However, if we now look at this chart, which dates back to 1985, you can see that inflation has been a persistent extreme problem in Venezuela. In 2014, inflation was recorded at 62%. In 2015, it rose to 121%. In 2016, it jumped to 255%. In 2017, it was 438%. In 2018, it jumped to 65,374%. Now, we talk about hyperinflation a lot in economics terms. It was a term coined originally back in the 1970s, and at that point, 50% per month inflation was seen to be hyperinflation. But whatever definition you use, 65,000% inflation is certainly hyperinflation. It is off the scale. In 2019, inflation was recorded at more than 19,900%. In 2020, it was more than 2,300%. 2021, 1,588%. 2022, it came back down to what looks like a more manageable 200%, but obviously 200% is still completely off the scale. So what on earth is going on in Venezuela to cause these extreme rates of inflation? This chart shows the movement in the exchange rate between the US dollar and the Venezuelan bolivar over the last 5 years. And as you can see from this chart, there has been a significant devaluation in the bolivar. However, this chart isn't really a true reflection of the extreme devaluation of the currency over that period, because the Venezuelan currency has actually been devalued by the government on 3 separate occasions. The original bolivar currency was introduced in Venezuela in 1879 and was named after the revolutionary leader Simón Bolívar. As a result of the high levels of inflation seen in the early 2000s, the original bolivar was replaced by the bolivar fuerte in 2008, and a devaluation of 1,000 to 1 was introduced by the authorities. So this meant that 3 zeros were taken off the currency. So a 2,000 bolivar note now became a 2 bolivar note. As a result of the hyperinflation we've just talked about, the denomination of the banknotes started to get larger and larger, and in 2016 Venezuela introduced the 20,000 bolivar note, followed in 2017 by the 100,000 bolivar note. By 2018, the hyperinflation and the associated devaluation of the bolivar currency resulted in the exchange rate with the US dollar reaching 4 million to 1. In order to address this problem, Venezuela once again devalued its own currency, this time by 100,000 to 1, thereby taking 5 zeros off the currency. And new currency notes called the Bolivar Soberano were issued. And interestingly, at that time, the currency was pegged to the new cryptocurrency that Venezuela had issued. At the time of this devaluation, the highest denominated note was 500 Bolivar. However, due to continued hyperinflation and devaluation of the currency, by January 2019, the country issued 10,000, 20,000 and 50,000 Bolivar notes. And by 2021, Venezuela issued its first million bolivar note. And as the exchange rate at that time was around 2 million bolivar to 1 US dollar, a 1 million bolivar note was worth around 50 cents. Now, in order to try to address this slightly embarrassing problem, on October 1st, 2021, the Venezuelan president, Nicolas Maduro, applied a devaluation of 1 million to 1, thereby knocking 6 zeros off the value of the currency. So the previous 1 million bolivar note was now worth 1 bolivar. So if we now return to this chart, you can now get an understanding as to why this doesn't really represent the severe devaluation of the currency over the course of the last 5 years, because the current official exchange rate of around 26 bolivar to 1 US dollar doesn't take any account of the 3 official devaluations that have taken place that have removed 14 zeros from the currency. And when you get a situation like this, where inflation is running at extreme levels and the value of the currency is diminishing on a daily basis, what happens is the residents of that country abandon their home currency and move to the US dollar. And that's exactly what's happened in Venezuela. The vast majority of people in Venezuela are looking to use the US dollar rather than the currency. And it's estimated that over the last 12 months, less than $10 million worth of transactions have taken place in the Venezuelan bolivar. And the only people who are being paid in bolivar are state employees. Everybody else wants the greenback because they've got confidence in the long-term value of the US dollar. Now, before we go on to talk about the problems that Venezuela has experienced, I wanted to look at the movement in oil prices over the last 25 years, because this is really important in terms of understanding what's gone wrong in Venezuela. And what this chart shows is that over the last 25 years, there have been some extreme movements in oil prices. In June 1998, a barrel of oil was trading for around $12.50. However, 10 years later, in June 2008, that same barrel of oil was trading for more than $140. By December 2008, prices had fallen to $46. They then bounced back to around $125 per barrel by April 2011. By January 2016, they were down to $35 per barrel. In September 2018, prices had risen back up to $80 per barrel. They then fell to around $23 per barrel in March 2020, hit a high of around $110 per barrel in May 2022, and today a barrel of oil is trading for around $75. And the reason that I wanted to walk through this graph with you was really to show the cyclicality that the oil industry experiences. We see highs and lows in oil prices, which are generally linked to what's happening in the global economy. At times when the economy is very strong, there is generally high demand for oil, and that pushes prices up. However, when we see a drop in the global economy, that generally reduces demand and we see a fall in prices. And the reason that that's important is that if you're a country that's dependent upon oil revenues, you're at the mercy of what's happening in the market. If you're a producer of oil that's selling 1 million barrels, this time 25 years ago, those 1 million barrels would have netted you around $12.5 million. However, in June 2008, those 1 million barrels would have netted you around $140 million, which represents an increase in income of more than 10 times. However, 6 months later, the price of oil was down to $46 per barrel, so those 1 million barrels would have netted you $46 million, which represents a fall of around 2/3. So what you can see from this chart is that the extreme movements in oil prices have a huge impact on oil-producing nations. When prices are high, they'll be making extreme amounts of profit. However, the price of oil can fall sharply in a short space of time, which means that you'll be getting a lot less revenue. So as a sensible economist, you would say that during the periods of extremely high prices, you should be banking a lot of that profit to cover the periods when prices fall. But unfortunately, it would appear that Venezuela didn't have a lot of sensible economists telling them to do that. This chart, put together by Visual Capitalist, gives you a visual representation of the countries with the largest oil reserves in the world. And as you can see, Venezuela has the largest identified reserves with 300 billion barrels. Saudi Arabia comes in at number 2 with 266 billion. Canada at number 3 with 170 billion. Iran has the 4th largest reserves at 158 billion. Number 5 is Iraq with 143 billion. Number 6, Kuwait, 102 billion. 7, the United Arab Emirates with 98 billion. 8, Russia with 80 billion. 9, Libya with 48 billion. The country with the 10th largest reserves is Nigeria at 37 billion. We've then got the USA with just under 37 billion. Kazakhstan with 30 billion. China with 26 billion. Qatar with 25 billion. And Brazil with 13 billion. The first commercially viable oil fields were identified in Venezuela in the early part of the 20th century, and the first official oil well was established in 1914. During the 1920s, there was an influx of foreign countries and foreign investment. Multiple oil wells were set up all across the country, and by 1928, Venezuela was the world's largest exporter of oil. The industry continued to be developed, and by the end of the 1930s, Venezuela was the world's 3rd largest producer of oil, behind the USA and the Soviet Union, and was still the largest exporter. Now, prior to the oil boom in the 1920s, agriculture was a very important part of the Venezuelan economy, as it was a major employer and accounted for around 30% of total GDP. However, as global demand for oil grew, Venezuela put more and more of its effort into the oil industry, and by the 1950s, agriculture only accounted for around 10% of employment and GDP. Now, Venezuela is a socialist country, and in 1943 its president introduced the hydrocarbons law, which meant that the Venezuelan government was entitled to 50% of all oil profits. However, as a result of the increasing importance of oil to the Venezuelan economy, on the 1st of January 1976, Venezuela officially nationalized all of the oil industry, which meant that the Venezuelan authorities seized all assets owned by overseas companies and replaced the management and the operational control with Venezuelan companies. The nationalization of the oil industry in Venezuela meant that large international oil businesses such as ExxonMobil and Chevron lost the ownership and control of their assets. Venezuela then took the decision to expand overseas, and in 1986 bought a US-based company called Citgo, through which it then acquired refineries in the USA and Europe. In 1999, Hugo Chavez was elected as the president of Venezuela, and he introduced the Bolivarian Revolution, named after the revolutionary Simón Bolívar. As we saw earlier in the video, from 1999 through to the middle of 2008, the world experienced a period of prolonged and progressive growth in oil prices, and this was obviously great news for Venezuela, because they were producing large amounts of oil, and the price kept going up and up and up, which meant that they were getting more and more revenue. And the president's new policies were focused on using all of this revenue to fund social programs in Venezuela. However, these programs were not well managed. There was a lot of overspending, allegations of corruption, and very little new investment into the oil industry. As a result of this economic mismanagement, Venezuela started to experience high levels of inflation, extreme poverty, and shortages of food, medicine, and healthcare. And the biggest single concern from Venezuela's point of view was that all of these problems had arisen at a time when oil prices were marching towards an all-time high. The severe drop in global oil prices seen at the end of 2008 caused major problems in Venezuela because the country saw an extreme fall in its income. And from an economic perspective, this problem is referred to as Dutch disease, which is a situation when a country becomes dependent on income from one individual source. And the reason that it's referred to as Dutch disease is that this phenomenon was first coined by The Economist in the 1970s, relating to the discovery of the Groningen gas field in Holland in 1959. Demand for the export of this gas was very high, and as a direct result of that, there was a lot of demand for the Dutch currency, which meant that it strengthened significantly, which made all of the other exports from the Netherlands relatively more expensive, and this made these products less competitive in the international markets. So the country saw a decline in its other exports at the same time as gas was taking off, and this created major problems in the Dutch economy, and Venezuela is suffering from exactly the same problems. Over the course of the last 60 or 70 years, the economy has become entirely focused on oil. All other parts of the economy have been left to go to rack and ruin. They really haven't had any levels of investment. And that clearly represents a major risk for any country, because if there's a major fall in the value of oil, or you have some other production problems, then that is going to leave your country very exposed. Now, going back to the oil price chart, the fall in oil prices in 2008 recovered over the course of the next few years and remained high until the middle part of 2014. However, by the start of 2016, oil prices were down to around $30 per barrel, and that represented a major problem for Venezuela, and the country went into recession. Now, in terms of what was happening from a political perspective, Hugo Chavez, who had actually recently started his fourth term in office, died in March 2013, and his chosen successor, Nicolas Maduro, was voted into power 1 month later. The Venezuelan economy was already suffering significantly, but the sharp fall in oil prices dramatically reduced the amount of income that the country was earning and threw the country into a deep recession. The lack of investment in the oil industry over the previous 15 years started to take its toll, and production levels started to fall dramatically at the same time as prices were falling, so this was a real double whammy for Venezuela. As we saw earlier in the video, the economy started to experience extreme hyperinflation. Prices went out of control, and there were shortages of food and medicine and all basic essentials. The people of Venezuela took to the streets to protest against the president's new policies and his management of the economy, and over 100 people were killed in clashes with police. By 2017, the situation had got so bad that Venezuela was actually experiencing gasoline shortages, which is incredible for a country with the largest oil reserves in the world. A humanitarian disaster was declared in Venezuela, and it was reported that in 2018, over 1/3 of all of the people in Venezuela had lost weight by what was referred to as the Maduro diet. Basically, people were eating less than one meal a day. The presidential term in Venezuela runs for 5 years, so in 2018 a new election was held, and when President Maduro was voted back into power, allegations were raised by the USA, the European Union and numerous other countries relating to corruption over the election. And as a direct result of the combination of these corruption allegations and the humanitarian crisis, the USA, the European Union, the UK, Mexico, Panama and Switzerland all raised sanctions against Venezuela. Historically, the USA had been the largest purchaser of Venezuelan oil. However, from 2019 onwards, it no longer purchased any oil. At that stage, Venezuela had been in a deep recession for 5 years. However, the impact of the sanctions made things significantly worse and further reduced both the income that Venezuela was earning and also the potential for any future investment into its oil industry. Venezuelan creditors, predominantly based in the USA, are currently crafting a proposal for 200,000 barrels of Venezuelan oil per day to be redirected to a trustee to pay creditors with claims on Venezuelan assets. The latest proposal to be discussed with the Venezuelan government would see a trustee created that would redirect to the United States a portion of Venezuelan oil exports currently being sold at a discount to China. Under the plan, the trustee would receive a portion of the sale proceeds to pay creditors, while another portion would pay for fuel supplies to Venezuela, where gasoline and diesel are often scarce. A license by the US Treasury Department would be required, and Venezuelan state oil company PDVSA would not have access to cash flow from those exports. One of the opposition's arguments is that PDVSA is currently forced by US sanctions to sell its oil in Asia at deep discounts. Those discounts, at least $20 per barrel at current market prices, could be recovered if sales are made to its traditional US clients, including refiners Citgo, Valero Energy and PBS Energy, and used for funding payments to creditors. Venezuela resumed oil exports to the United States in January after a 4-year pause, following a license extended by the Treasury Department to Chevron Corp for exporting crude produced by its joint ventures with PDVSA. In June 2023, Chevron shipped 134,000 barrels of oil per day from Venezuelan ports. Chevron is refining a large portion of the Venezuelan crude and selling some to refiners. Energy analysts estimate the US Gulf Coast has more room for processing Venezuelan heavy sour crude grades. So what's the summary and conclusion today? Well, I wanted to post this video really to give you a better understanding as to what is going on in Venezuela. You may have seen in the press over the past few years that Venezuela has extremely high rates of inflation, that it's having major problems, but how does that fit together with having the largest oil reserves in the world? Because logically speaking, you would expect the country with the largest oil supplies to be one of the richest nations in the world. But as we've seen from today's video, the oil industry and the economy in Venezuela have been very badly managed over the course of the last 50 years or so. The decision to nationalise the oil industry in 1976 was in line with the socialist principles in the country, but the problem that Venezuela created for itself at that point was that by seizing all of those assets, that meant that overseas companies were not going to invest further into the oil industry in Venezuela. So the responsibility was entirely upon the Venezuelans themselves to keep all of those assets state of the art and to make sure that everything was progressing. But unfortunately, over the course of the last 50 years, that hasn't happened. The Venezuelan authorities have been making hay while the sun shined. They made a lot of profit from the oil that was being produced, but they weren't reinvesting that profit into those facilities. So over time, that machinery and those facilities have become outdated. They've started to break down. They've become less efficient. And that's had a direct impact on the amount of oil that Venezuela is able to produce and therefore on the revenues that it's earning. So even without the problems that are caused by the movements in oil prices, Venezuela would have encountered major issues anyway, because that machinery has a finite life, and if you don't look after it, if you don't maintain it and constantly update it, then it's going to become obsolete at some point. However, that isn't the only problem that Venezuela caused for themselves. By placing all of its emphasis on oil, the Venezuelan authorities didn't invest in any other parts of the economy. They let agriculture, industry, and all of the other sectors go to rack and ruin. And what that meant is that when the oil industry started to produce less revenue, they didn't have anything else to fall back upon. And by that stage, Venezuela was entirely dependent on imports. So it wasn't producing enough food to be able to feed all of its people. This situation resulted in high unemployment and poverty amongst its people. And when oil prices started to fall in 2014, Venezuela didn't have anything to fall back upon. They were entirely exposed to those oil revenues. So all of this is a recipe for disaster. But then when you overlay the overspending, the mismanagement, and the allegations of corruption against the Venezuelan authorities, it makes the situation a whole lot worse. And then what happened was that despite the fact that there were national protests against the existing authorities, and particularly President Maduro, he was re-elected in 2018, and that sent alarm bells ringing all around the world, and the majority of countries from the West stated that they did not believe the credibility of that election, and so sanctions were applied against Venezuela. And those sanctions meant that the markets for Venezuelan oil reduced significantly. So this was a real double whammy for Venezuela, because its production had been falling progressively because of the obsolete machinery that it was using, but it then lost its available markets to sell into. So this meant that Venezuela's income fell even further at a time when it was already in a deep recession. So all of this is a fairly grim tale, particularly when you take into account the fact that this country has huge natural resources and therefore should be a net exporter, should be self-sufficient, should have lots of foreign currency to be able to buy in all of that food and medical supplies and everything else that the country needs. So what's going to happen over the course of the next 3 to 6 months? Well, the only way that Venezuela can get itself out of this situation is by receiving some help from somebody. And since the start of the war in Ukraine, things have started to change a little. As I'm sure you'll be aware if you follow the channel, Russia is now looking for more counterparties to deal with because it's lost all of its markets in the West. And it's recently been announced that Russia is negotiating a debt restructuring deal with Venezuela, and that the two countries have signed a total of 11 agreements covering everything from medicine supply to oil well services. But surprisingly, there's also a glimmer of hope from the USA. In November 22, the US authorities issued a license to Chevron, allowing the country to expand its production in Venezuela and import Venezuelan oil into the USA. Now, under the terms of that license, no cash payments are allowed to be paid to Venezuela, and Chevron would basically be taking oil in lieu of the debt that it's owed by the country. So there's a big question mark as to whether or not Venezuela would want to do that, because they wouldn't actually be getting paid for that oil, they'd just be paying off their debt. And Venezuela defaulted on their debts around 6 years ago, and I'm sure it's not really at the top of the agenda for President Maduro to pay back anything to the USA, which have applied significant sanctions against him. However, the issue of this license does seem to indicate that the USA's position against Venezuela is thawing a little. But in terms of what's the likely outcome over the next 3 to 6 months, realistically, Venezuela is unlikely to receive any major financial support over the next 3 to 6 months, which means that its export markets are still extremely limited and that its production capabilities won't be improved. So the situation is likely to continue as it is. We've got rising inflation, we've got a currency that is basically worthless. The economy has been completely switched to the US dollar, and we've got extremely high levels of poverty, we've got food shortages, we've got medicine shortages, and there is a mass migration happening out of Venezuela right now. A lot of people are leaving the country because they've lost all hope that things can be turned around. So unfortunately, the summary of this video as it stands at the moment is that things don't look like they're going to change, and it's extremely possible that things could actually get worse in Venezuela over the course of the next 3 to 6 months, funds because they're not eligible for an IMF bailout as a result of all of the humanitarian issues going on in the country right now. So they really are in a very difficult situation. I'll keep you posted on any further news and developments as and when they happen. Hopefully you found today's episode useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and here's something to put a smile on your face.